So, I'm just waiting for it to go live on YouTube and then we'll start. So, all right, perfect. Let's put you guys up. Good morning. Hope you guys all had a fantastic weekend. Pretty much, the cat's out of the bag. It's been a very stressful couple months, to be honest with you. It's doing a transition, not easy. I don't hope. I'm muted. Are you sure? Can everybody hear me?
Yeah, we can hear you.
Okay.
I can hear you.
Okay.
Yes.
Yeah, I don't have my microphone that I typically use yet. Hopefully, I'll have it by next week. But yeah, it's been a stressful couple months doing a transition to another company. It's not easy, especially on the mortgage side. I can't just pick up my clients and their documents and go. Unfortunately, the only thing I can take with me is my client list. But any applications, documents, stuff like that, I have to get clients to resend them in and stuff like that. So it's been very stressful for us to get the move done. We finally did it last Tuesday, right after Labor Day. We're here now. So it took a long time, a lot of thinking and a lot of consideration to make the move. I was with Highlands for about 5.5 years. They treated me well, but it's time to move on to the next stage of my career. And I'm glad that you guys are here to be able to take the ride with me. So let's jump in because I know that we haven't had Monday Mortgage Minute in the last couple of weeks. Last Monday was Labor Day. The Monday before that, I canceled it. So I was trying to get everything ready for the move. So quite some news to kind of go over today, and then kind of give you some pointers or see if you guys have any questions on the new company, what they offer, stuff like that. Deborah, I'll get you that info. So the Fed is cutting rates next week. We know that, right? The question is if it's 25 basis points or 50 basis points ultimately. The 25 basis points is already being accounted for in the market, meaning that when the Fed makes the move next week, unless it's higher than 25 basis points, rates are most likely not going to go crazy that day because the market is already kind of anticipating that, right? That's why we're seeing rates kind of drop. They're dropping ahead of time because the Fed has already confirmed that they're cutting rates, right? The market is assuming 25. So if that happens next week, we'll have a decent day, but it's not something where from that one day to the next it clicks, right? We're already kind of seeing that pricing in the market already. Purchase applications are rising little by little, and we're only down 4% from this time last year, which is pretty impressive considering how bad we've been all year with purchase applications. Rates on average are right under 6.5%. FHA rates are in the mid to high fives if you're doing a standard FHA loan. So we're already seeing loans in the fives. People just don't know about it. It's something that has started to happen in the last couple of weeks, but we are there 5.75, 5.5 on an FHA. It's pretty nice. ADP's jobs report for August came out showing only 99,000 jobs were created, which was around 50,000 less than expected. Small businesses are the ones hurting the most, showing 9,000 layoffs. Annual pay for job stairs is at 4.8%, which is the same as July's number. Annual pay for job changers is at an average of 7.3%, which is also the same as the July number. So you're seeing that pay is increasing year over year, but it's not increasing month over month. It's staying pretty flat so far. BLS jobs report, which is the Bureau of Labor Statistics, reported 142,000 jobs created in August, which was also below estimates. Average earnings are still higher than this time last year, of course, and they say that unemployment is at 4.2%. However, I believe that to be inaccurate because within the same report, you see that 438,000 full-time jobs were lost and 527,000 part-time jobs were gained. So although people are technically working, it isn't full-time a lot of times, and people are taking multiple jobs. I see it on a day-to-day with people filling out applications, right? They have now 2 jobs or 3 jobs that they're all working at the same time, which actually we could discuss that as well. Typically, when you have that multiple job scenario, that second job is so important to not have any gaps at all. If you have even a month gap is very difficult to kind of cover it. It's not the same thing as a primary job, right? Where you have the primary job and you took off a month for whatever the reason was. Between jobs, you can use that income without a problem. When you're doing it, when you're trying to do multiple jobs, there cannot be any gaps on the secondary employment. Okay, you have to have both jobs consistently for that 2 years in order to be able to kind of push forward with it, with very, very minimal exceptions. So a lot of right now, what's happening is a lot of people just, and maybe they've only had their second job for like a year, right? Or something like that. We won't be able to use it. Now we could try to puzzle it together, very similar to how we do with primary jobs, right? With school history, or maybe self-employment if you have some 1099 income, right? Piecing that together, but ultimately you have to have 2 years of consistent multiple jobs. Initial jobless claims and continuing claims are pretty much unchanged still. However, seeing the job sector showing serious signs of slowing down, with less job openings and more firings, you would think that that number will start to increase soon. We've thought about that this whole year, and hopefully, fingers crossed, it finally will happen. Well, not finally, it's not a good thing, but it will help with getting rates lower for sure on that side. Now, I think this is interesting. I read an article over the weekend about Redfin. So Redfin is expanding their Redfin Next to agents worldwide or nationwide. Sorry, this is basically their brokerage firm, but it requires the agent to be W-2 and not an independent contractor. So agents can get paid up to 75% of their commission on self-source deals and 40% for leads they receive from the site, but they have most of their expenses covered, including dues, technology tools, team support, and for listings, even their photography, staging, yard signs, and other marketing materials are taken care of for them. So they're basically taking less commission, but they have much, much less expenses as well and more support. And because they're W-2, they also receive healthcare benefits and 401k matches. I don't know, you guys know that I do not like the online real estate sites, and I think that NAR should cut ties with all of them and make their own site if they really cared about their agents. However, I digress from that topic. I think that this is a good move by Redfin because as agents continue to struggle, if they want to stay in the game, this is a way to be able to do that. And by hiring agents in the local market, they're going to be able to capture local markets across the nation, right? Speaking about Redfin specifically. So for someone trying to start a brokerage, this may be a good business model in the future too. But it is 100 times more costly than the standard model now, which is why that commission split is also much greater. But I don't know, I kind of wanted to tell you guys that because I think it's a pretty interesting way to a brokerage that we haven't seen in the past. And I know that right now our industry is changing almost overnight with a lot of the things that are happening, not only in the real estate market, right, with rates, with affordability, but also with the forced NAR settlement and other things that are starting to kind of come into play here. I also read something as well where the lead person that started the lawsuit for the NAR settlement is actually creating their own brokerage as well, online brokerage too, where I think they're giving 100% to agents or something like that. So some of the, I do want to talk to you guys. I know I mentioned the 100% financing FHA. I think about a month or two back, I was already considering making the move here, and I already knew that they had that program. So I wanted to kind of touch base on that, as well as some condo stuff, and then we'll open up the floor for some questions. So on the 100% financing FHA, there really is no income limit. You don't have to be a first-time home buyer. You just have to have a FICO of 600 and be willing to take the program as it comes, pretty much. So the client will get 3.5% down payment assistance. We also have 5% down payment assistance, which is 101.5% financing as well. Same thing, no income limits, no first-time home buyer eligibility needed. Minimum FICO of 600. As long as DU runs, that's pretty much all we care about is making sure we get the approval on the back end, obviously. Now, with these programs, they are repayable monthly. Okay, so think of it as a client is taking out a personal loan basically for their down payment. That's what it is, except personal loans APR is going to be much, much higher and the term is going to be much shorter. So this is the second mortgage is basically a 10-year term. So if you're borrowing, let's say 3.5% down is $16,000, right? You're doing $60,000 and the rate is 2% higher than what your lock-in rate is. So if your lock-in rate is at, let's say 7%, that means that your second mortgage is going to be at 9%, 10-year term, 14,000. On average, it's about 150 to 200 bucks a month extra on that monthly payment added on there if you're doing 3.5. Now, if you're doing 5%, obviously that payment's going to be a little bit higher because it's more money that you're borrowing. Now you're talking about getting 20, almost 20 to 30,000. There is no cap to it. The cap would be FHA's loan limit, which is 621, right? That's the cap. Other than that, you'll be able to get 5% of up to 621,000 on an FHA loan if you wanted to. The only thing is that second mortgage is repayable over time. So it's not like Hometown Heroes where they pay it out of the equity when they refinance or sell, which could also be looked at as a positive too, right? Because if you're paying down the principal on that second loan over time, you do decide to refinance or sell in, let's say, 3-5 years, where if you were taking Hometown Heroes, you would owe that full 20 or 30,000. Right, you may only owe at that time 7,000 or 5,000, right? And you make a little bit more off the sale or off the refinance. You have a little bit more cushion, things like that, right? So ultimately, that is how the 100% and 101.5% financing works. It's FHA only. It is not for conventional. For conventional, you can still do the Florida bond. Even for FHA, you can still do the Florida bond options as well. But this gives you a little bit more, especially if the client has higher income, but haven't been able to save because of, different situations of where the economy is right now, which is what we're seeing a lot of happening. They'll still have an avenue to be able to close on their home and get that down payment assistance to close the gap for them. Now, right now, closing costs and everything are towards the end of the year is where closing costs really start to get more expensive. So keep that in mind with your clients. We're sending updated closing cost worksheets starting this month, but with taxes, right? With taxes being due in November, what happens is that technically, since the borrower's first payment, if they close in September, isn't until November, then they're being collected all 12 months of taxes already starting this month, right? The full 12 months of taxes are going to be starting to get collected this month for the buyer. Now they do get a credit from the seller, right? But they're collecting 12 months plus 3 months of cushion on your taxes and your homeowner's insurance. So you're seeing those closing costs very, very elevated. So keep that in mind when you're speaking to clients. And we are doing the same thing as well. We're trying to be as accurate as we can with our closing cost worksheets. So that way we don't get bit in the behind. When it comes to condos, and I want to bring this up because I know that a lot of times I'll tell you guys, the condo can be done or a condo can't be done. And I don't know if you guys really understand why or why not. So I just kind of want to clear the air because I did have an agent, ask me why I couldn't do a condo, and another lender was essentially telling her something that was not correct. And I just don't think that the way she explained it, because she didn't know what it was really just a disconnect. That's all. It wasn't the loan officer giving false information. It was just she didn't understand it, so she explained it incorrectly. Fannie Mae, okay, the condo project management, that's going to work for Fannie and Freddie loans, okay, anything conventional. That condo portal is what I try to live and die by to make your job easier, my job easier, and the client with the least amount of headache as possible. Okay, so if a condo is Fannie Mae approved, I do not care what the listing agent says. If they have a budget, if they don't have a budget, if the budget is in the trash, I don't care. If it's Fannie Mae approved, the only thing I need is the master insurance policy. That is it. Okay. Now, if it is not Fannie Mae approved, there's 3 versions, right? There's one where there's called no Fannie Mae review. That means that we have to do the full review, including the budget, including the master insurance policy, including the condo questionnaire, including the 40-year recertification or even 50-year recertification. We got to go through that whole process. So I let everybody know up front, if we go through this whole process, most of the time, especially in this market, it's going to be very difficult to close this condo because there's probably something wrong with it. Most of the time there is, right? We'll still try it as long as everybody's aware. You're spending money on inspection, on questionnaire, on application dues, on appraisal, all of that stuff, right? You're investing about $1,000 or more to see if once we get the documentation, if the condo questionnaire comes back clean, if it doesn't come back clean, what needs to be fixed and all these things on there. So no Fannie Mae review just means that the lender themselves have to do a full review like normal, right? And then when you're doing, when a condo is unavailable, that means that there is no one, I don't care who they are, that can finance that conventional Fannie Mae, okay? If they decide to finance it Fannie Mae, which they will not, but hypothetically, if they were to try to do that, the lender would be on the hook to purchase that loan back. And I've talked to you guys about purchasing repurchases before, right? You're buying that loan back at 80 cents to the dollar, 75 cents to the dollar. You're not buying it back one for one, right? And a lender, their job is to kind of recycle money, right? They're doing a loan, they're going to get that loan done, they're going to sell it for 3 to 5% on the in the secondary market, so that the servicer is the one that's collecting those monthly payments over time. They're getting that new money, they're rinsing and repeating, right? That's how lenders typically work. So nobody wants to be stuck with a loan that they can't sell ultimately. So if a condo is unavailable, that means that you cannot get it done Fannie Mae at all, or Freddie Mac, conventional in general. The only way to get that loan done would be doing a non-conforming or a non-QM loan, which typically requires, 20 to 25% down. There are some times where you're able to do as low as 10% if the client has great credit and if that loan amount is large enough. Because when it comes to non-conforming, they don't do anything below $100,000 on the loan. So that means that purchase price already has to at least be at 175 in order for it to even be considered at that point. So keep that in mind. The other thing too as well, because it happened to me recently, these condos, when we're going under contract or when we're under contract, they can get switched under contract. It happens. Doesn't happen that often, but it does. Okay, so if it starts off Fannie Mae approved, and banks like Chase, like Wells Fargo, even smaller banks, even smaller lenders, even though Fannie Mae tells them they don't have to do a full review, typically this is more for banks because banks are going to be servicing their loans, so they want to make sure that they're servicing a good loan. They're going to do a full review on that, right? No matter what Fannie Mae says. When they do a full review, if they find something they don't like, they can report it to Fannie Mae. Fannie Mae reviews the documentation and says, okay, this condo either has no Fannie Mae review, which means it goes from available to its lender's due diligence, or completely unavailable for XYZ reason. And that happens, we have to pretty much stop what we're doing and pivot. Okay. The only time that it's acceptable for us to be able to move forward with a Fannie Mae approved loan that gets switched to unavailable or no Fannie Mae review is once the loan is closed and signed off, and it maybe took us 2 weeks to sell it to the servicer. We closed on it when it was a Fannie Mae approval, so we have those reps and warrants basically directly from Fannie Mae. Okay, so trust me, I try to give you guys the info that allows us to have the easiest job possible when it comes to condos because of how difficult they are right now. But there are times where when we're under contract, it gets switched. So if you ask, about a condo and I tell you it needs a review or it's unavailable, understand that it's just something that no one can pretty much do unless they want to hold the bag, and anybody wants to hold the bag. Do you guys have any questions on loan programs, products, anything that you guys came across the last couple of weeks? I know we haven't seen or spoken to each other in a while. If you have any questions on the 100% financing or anything like that. No, we're good. You guys sure? All righty.
Well, so I'm sorry, Mike. You mentioned 100% finance, and I probably missed that shot. Is that the 8515?
No, the 8515 for no, 7515 is for condos. This 100% financing is FHA product where we're giving 3.5% or even 5% down payment assistance on FHA loans. There's no income limits. The credit minimum is 600. There's no first time home buyer eligibility. If you qualify for the FHA loan and you're at a 600 or above, you'll qualify for the down payment assistance. Now, obviously, the lower the credit you are, the more difficult. You won't get the full 3.5 or the 5%, right?
Where's the 3.5 coming from?
It's a second loan.
Is this a second loan with the same lender?
Yes, everything is done in house. Yeah.
Awesome. That's awesome to know. When the rates are compatible.
So the rates on those are typically higher than a standard FHA. Probably about on the back end 1.5 on average to 2 on the pricing sheet. So basically meaning that if you are getting an FHA loan at 6.75, no points on a credit score, but based off of your credit score on that DPA, in order to get that 6.75, you may have to pay 1.5%, which will get taken from that down payment assistance that you get. So that's really the difference that you're seeing. It is going to be a little bit more costly for the client, but it gives them an alternative to come in with less money, especially without any hometown heroes. Even considering that 5% down option as well is helping a lot of people with coming in because it's covering most of your down payment.
So what's the interest rate on the second?
The second is going to be 2% higher than your first. So if you're at a 6.75 or a 7, plus 2% is going to be either 8.75 to 9. Let's say you're locking in at a 7, right? So that means that your second is going to be a 9%, 10-year term. On the 3.5% down payment assistance, on average, it's about $150 to $200 a month is what they're looking at paying monthly on the second.
One more question, then I'm gonna stop. The ratios.
The DTIs, it's FHA, so it goes all the way up to 56. It's 56.99.
And that's 45 on the front.
46.9 on the front. Yeah.
Okay, got you. That sounds great. Sounds like a plan.
Yeah, it's a great program. What other questions you guys have? Nothing?
I'm just thinking about we need to do a new video. It is 100% financing. That's all.
Yeah, we definitely do. Actually, here at the office, we are setting up a legit studio room for you all. So once it's getting close to being done, I'll let everybody on Monday Mortgage Minute know, because you guys will be able to come whenever you want to film your own content. Just let me know ahead of time. I'll book the room for you. Everything will be set up. We'll even be able to get it edited for you. You just need to shoot whatever you want to shoot.
Oh my God, that sounds like music to my ears if you have an editor. But yes.
Yeah.
All right.
Just shoot whatever you want to shoot.
Let me know. Just let me know.
Okay.
All right.
Yeah, I'll let everybody know once it's done, and then that way you guys will be able to jump in here and film content whenever you want. So that's already going to be in play here as well. And we are getting toward the end of the year, so we'll be doing the business planning section as well that I typically do every year on Monday Mortgage Minute, where we kind of go over what you guys plan to make next year. We look at what that looks like in terms of amount of closings that you're going to need, listing side, selling side, and all that stuff. So we'll start talking about that probably mid to late this month, because you do want to start planning for next year 2 to 3 months in advance, because we know that in this industry it takes about 60 days for a client to convert and for you to actually get paid. So the time to start business planning, if you guys already haven't, is probably going to be starting this month at some point. And that way you could start those activities October, November, December, and then kind of fall that into January is where those closings will start to come into play. Hey Felicia, this is my cell, and the first one's my cell, the second one's the office line. No problem. All right, y'all, have a good one. We'll be back next week.
All right, thanks, Mike. Appreciate it.
All right, no problem. No, I'm gonna call you today. Yeah, the week that you called me, I was in the middle of transitioning and everything, so I'll give you a call.
Thank